Hi everyone. So I'm going to update my gold analysis. Today is Thursday the 21st of November 2019, and I'm going to do this one as slightly longer than usual, and because I want to really spend a little bit of time explaining the rationale behind it. So my view on gold is still in the longer term expecting it to go long. I'm still bullish on it, and I'm still ideally would prefer for it to do a retracement on the monthly time frame down towards 1420, 1410, and as far as 1350. Right, so this is what I've been looking for. That's the area that I've highlighted for me, which I think would be the best for it to do. Now, so there's effectively a longer term uptrend. If I then measure that with Fibonacci from this significant low up to the high, what's interesting about this is that the 382, the 50, and the 618 overlap effectively with those key horizontal price levels. Okay, so that to me is pretty good, and that also supports the idea that a minimum retracement down to 382 is not that unreasonable. And a 50 Fib and a 618 retracement, they are all perfectly acceptable as concepts. So now if I then go down to that weekly time frame, I was highlighting sort of bullish candles. This one was not broken by the subsequent candle. The high of it was not broken, so there was no follow through from the market. This very nice bullish candle was also not subsequently broken by the following candle. In fact, the low was broken before the high was broken, which indicated effectively that the bears had won out on that session. It then closed below this daily support resistance level, which I'll talk about in a moment, and we now have a downtrend of lower highs and lower lows on the weekly. Okay, so the current trend for the weekly is down, the current trend for the monthly is up. All right, and the current trend for the daily is down as well. So you could just see here the distances where I'm expecting price to head towards. So if I then go to the daily and just zoom out here a little bit, there's actually a local level of support, and price broke through that on that weekly and has now come back into this area of previous support and is struggling. If I just go and have a closer look at this, is struggling actually at breaking through that. You can just see that the last 5 or 6 days, price is really struggling to get past that sort of 1473 level. All right, so it's really struggling there a bit, and I'm actually looking at today's candle, which is interesting because if it does break the low of yesterday, we've technically got a swing high, and so what would make sense to me is for price to perform a swing high here and then subsequently head lower. All right, and then head down towards this next key level, which is what I'm looking for on that higher time frame. So would I trade it? Well, in principle, I don't like the idea of trading. I do have support from the weekly. The weekly is going down, the daily is going down. So it is on some level, there are some boxes being ticked to take it as a short trade. Is the risk reward or the reward to risk worth it? Well, if I do enter on the break of the low of this candle with my stop loss above the high of this resistance area, that looks about a 3.5 or a 4 to 1. Okay, so the reward to risk on that trade down towards this area is relatively feasible, especially if I do take part profits. The only big problem, of course, is that the longer term trend is to the upside. So in other words, it's entirely possible that price could break the low and turn around and then finish above this 1482 level, which would then effectively show a very strong bullish recovery. And then effectively, once price starts to get back up above this level, then I'm starting to switch to a more bullish. That in other words, I'm looking for that daily and weekly to fall back in line with that monthly uptrend, and that would produce a signal of that sort. However, in terms of normal market behavior, the most logical, rational behavior for the market to do now is to head lower to test either of these two levels. And so that is something I'm looking for. So I've got a couple of different approaches I can take if I decide to trade this. I could demo trade it, I could not trade it at all, or I could reduce my risk on that. Okay, so I could trade 0.5% or 1/3% if I do, because I have to acknowledge that there is a slightly higher risk because of the longer term trend to the upside. Alternatively, I could take a full 1% risk on that trade and then just accept that one of the boxes is not ticked, which is a monthly downtrend. So that's the approach of a professional trader at any rate. Certainly I'll be taking some profit at 1-to-1 to try to get this trade to break even as quickly as possible in terms of trade management as well as risk management. So I'm going to have a look at that. And so the way in which I may approach it is put my entry on the break of the low of yesterday's candle with my stop loss above the high of that 1482. And so that will constitute my entry and my stop loss. And then certainly look to take some profit ahead of this level, support and resistance, as price approaches this, because price in this area now becomes, to me at least, a valid turnaround point if the longer term trend is going to be to the upside. So there we go. That's having a look at it from multiple angles, taking the downtrend on the daily and weekly into consideration against the monthly uptrend. Also, what I'm going to do here as well is just highlight the Fibonacci retracement as well within this downtrend, price is encountering exactly that 382 as well as the 50-foot retracement level. So that's also very nice because it overlaps again with both of those support resistance levels that are identifiable on the chart. So there's a very, very nice technical confluences here, which isn't always the case, right? And even if I subsequently overlap that, or if I do clusters, if I measure multiples, they don't really change that much. So this area definitely has got a lot of bull and bears. The bulls and bears are fighting it out, and so it remains to be seen. But I think I'm going to take that trade out for at least from an academic or technical analysis perspective, and to see how that ultimately plays out. And then I'll make sure that I put this online, and we'll see what the outcome of this is, at least on that perspective. But I've explained the rationale, I've explained where the risks are, why there's a reason why it could actually go up, what I'd need to see in order for it to become, to invalidate that, and also reasons why price could actually ultimately hit down. All right, thank you very much.